Twilio is a hypergrowth stock that has smashed the market's returns since it came public. However, this stock has faced huge selling pressure recently and is currently down more than 60% from its 52-week high. Does Twilio deserve a spot in your portfolio? Here's everything you need to know about this business. My name is Brian Feroldi.
And my name is Brian Stoffel.
Thanks to StockCard.io for sponsoring this video. As of the time of this recording, I am a shareholder of Twilio. Brian Stoffel is not.
That's right, Brian, but let's dig into what this company's all about. Today, Twilio's worth about $31 billion. If you look for it, it trades under the ticker symbol TWLO.
Twilio's mission statement is to fuel the future of communications. This is a company that understands mission statements because this is simple, inspirational, and optional. Great job.
I agree, Brian, but what does this company actually do? Well, Twilio is a software as a service company that helps businesses communicate with their customers, whether it be via text message, voice, email, or video.
Yeah, Twilio's business is fairly complex and hard to understand, so here's the easiest way to think about it. Say you're a software developer and you're building a website or an app, and you want to build into your app the ability to communicate with your customers via text message, phone call, or video chat. How do you do that? Well, you could build those products from scratch and spend thousands of engineering hours and potentially hundreds of thousands or millions of dollars doing that. Or you can just buy those tools off the shelf from Twilio, embed them into your products very easily, and boom, you are instantly communicating with your customers.
And it's worth pointing out that you can communicate with them in a number of different ways. For instance, Twilio has an identity solution where you can use the tools to verify that someone is who they say they are.
So if you ever logged into a website and were asked for multi-factor identification to enter a code that was sent to you via text message, the odds are really good Twilio was the one behind the scenes powering that transaction.
But it doesn't stop there. Twilio's tools can be used for a number of things. They have an intelligence platform that allows for communication automatically with customers and orchestration. In other words, you can plan out a marketing campaign or if it's election season, a political campaign using Twilio's tools.
You can also use Twilio's advanced communication platform to build automated bots that answer customer questions whenever they reach out to you.
And the important thing to note is that because Twilio has built such an extensive platform, you can communicate with your customers in just about any medium, whether it's text message, voice, chat, video, even on WhatsApp and Facebook Messenger.
The bottom line for me is if you're a customer and you want to find ways to communicate with your own customers, Twilio provides a plethora of software based tools that make it easy to do just that.
So let's dig into the actual business model. As we already mentioned, this is a software as a service company. They have a usage based model. So every communication that you send out, you have to pay for. And they have a dollar based net expansion rate of 130%.
Now, Twilio has been rapidly adding customers for years. However, doing so has cost the company dearly on the sales and marketing line. For that reason, we think that this company's customer acquisition costs are very high.
When it comes to customer demand, it's a little bit difficult to gauge because we've never been through a true recession. During the pandemic, the company's tools actually became more important because face to face interactions weren't possible. That said, we think in general, this is a must have tool that is recession proof.
And because communication is an ongoing mission critical task, the vast majority of this company's revenue is recurring in nature.
Turning to the company's moat, let's first talk about the network effect. Brian and I actually have slightly different opinions when it comes to this. The super network that Twilio has developed since its inception is what powers the ability to send those messages to all those places, and the company claims that it gets more powerful with every data point it collects. Therefore, I think this is a medium network effect moat, whereas Brian thinks it's more of a weak one.
However, we both agree that the company's switching costs are very high. Once a customer and developer gets used to using these tools, it becomes hugely onerous to switch away to a different provider.
Next, it's worth pointing out that Twilio's key customers are the engineers that are building these APIs, and in that community, Twilio does have a bit of brand value.
And if you look back at this company's growth in customer accounts and spending per customer, it's obvious to us that this company's moat is expanding over time.
So let's turn to financials. When we look at the company's top line sales growth, it is fantastic, growing at 58% per year over the last 3 years. However, it's worth pointing out that acquisitions play an important role in that growth.
Twilio's gross margin has bounced around a bit, in part due to those acquisitions, but this company's recent consolidated gross margin was just under 55%. Management thinks that they can actually get this number to 60% over time.
Looking at the bottom line, there's been a lot of red. The company has had no problem reinvesting in itself to grab market share, and that has led to large gap losses.
The company is also burning capital on a free cash flow basis. However, the losses on a free cash flow basis are far lower than they are on the net income line.
And Brian, that's a really important thing to note because when you look at the company's balance sheet, it's very strong with over 5 billion in cash and less than a billion in debt. And since those free cash flow losses are so low, the company is in no problem of running out of cash.
And because the company is currently producing net income losses, its returns on capital are currently negative.
Turning to company management, Twilio has something that we both love to see, and that is a founder led business. Jeff Lawson is currently the CEO and chairman, and he has been at the helm ever since Twilio got its start.
Twilio gets absolute glowing ratings on Glassdoor.com. That's particularly impressive given that this company has a history of making acquisitions, which tend to be correlated with much lower Glassdoor ratings.
And finally, it's worth noting that we were a little bit disappointed with the amount of insider ownership here, especially since this is a founder led company. It's worth pointing out that Lawson does own super voting rights, but when you add all insiders together, they own about 5% of the company, which is worth $1.5 billion today.
Turning to long term potential, when it comes to optionality, it's clear to both of us that Twilio has tons of it. Twilio got its start primarily in messaging, which is still a very important business today, but the company has rapidly expanded out the number of products and tools that it offers to customers.
As Brian pointed out, the company got its start in text messaging, but as you can see by the revenue mix over time, it is diversified greatly, and we think there's still room for it to diversify moving forward.
In terms of operating leverage, Twilio has tons of it available, especially given the large bottom line losses. Management has stated that over the next 2 years, they're going to focus from just growing the top line to growing the bottom line. That could lead to outsized growth in non GAAP profitability and free cash flow.
Turning to the addressable market, it's worth noting that the company believes its TAM has grown extensively over the past 5 years. It was just 46 billion 5 years ago, and it believes that by next year it'll be worth 110 billion. Now, some of this growth has come via acquisition, but it still underscores how large the opportunity is here.
Now, as we stated multiple times, a lot of that growth, including the growth in TAM, has been because of acquisition. So, not all this company's growth has been organic in nature. That is a risk for investors to keep their eye on moving forward.
Despite Twilio's stock falling more than 60% from its all time highs, it has still been an excellent holding since it came public, returning 450% for investors versus the market's 145%.
Twilio also has a history of walloping Wall Street's estimates on the top and bottom line, including doing so 4 times in the last year.
And given all the information we provided with the company's acquisitive nature, it's not surprising to see that they are not returning cash to shareholders.
Turning to risks, there are a bunch for investors to keep in mind. First, we'll focus on the competition. Twilio is the far and away market share leader in the category it competes, but it does have numerous competitors such as MessageBird and Nexmo.
It's also worth pointing out that concentration used to be a risk for the company. In fact, it lost Uber as a customer, and at the time, Uber provided over 10% of revenue. The company has since diversified and grown away so that it's less of a problem today.
Twilio's share count has risen sharply over the last couple years, due in part to acquisitions and extreme levels of stock based compensation.
It's also worth pointing out that this is a somewhat difficult business to follow. As you dig in, you have to follow all the different acquisitions the company has made, and it also creates complicated financials that you really need to spend some time to wrap your head around.
There's also an outside force for investors to be aware of, and that is political spending makes up a pretty big chunk of the company's top line during heavy spending years. That could make the company's year over year financials look wonky depending on if it's a spending year or not.
And finally, despite the fact that the stock is down 60% from its highs, it's still relatively expensive, trading at about 22 times gross profit and 11 times sales.
That valuation is clearly indicating that investors are expecting strong top line and bottom line growth over the next couple years. If that fails to come through, look out below.
So, given all this information, what should investors look for? Well, the first thing is organic growth with the emphasis on organic. We have no doubt that acquisitions will help juice that growth, but we want to see the underlying core of the business continue to grow.
Second, pay attention to that dollar based net expansion rate. We want to see that customers not only stick around, but they continue to ramp up their spending over time.
And finally, we want to keep our eye on free cash flow and also margins. The company has said that they expect to be generating net income moving forward, but what we're really interested in is free cash flow. If they can bring in more cash than they're spending, it lends credibility and sustainability to this business model.
So, how did Twilio score on our investing checklist? The answer there is pretty good. On my investing checklist, this company got a 76. That's an impressive number given that it's not yet producing profits or free cash flow. Once those appear, this company could move into my high quality business category.
And on my framework, it got a 10. And this is a marked improvement from years past when it had heavy marks against it for its concentration issues. At the same time, I still don't own the stock.
But even though you don't own it, we've just made our call. So we're going to head on over to stockcard.io to hold ourselves accountable. All right. So here I am in StockCard. I'm in the anti fragile portfolio, which is Brian Stoffel's thumbs up portfolio. I'm going to enter the ticker symbol, which is TWLO. I'm going to do a buy decision. We're recording this on Wednesday, March 30th. This is a $174 stock, and I'm going to buy 6 shares. And the score on your system was a 10. Then I'm going to head on over to my quality checklist, which is the Brian Feroldi quality checklist, and I'm going to do the exact same thing.
And while Brian does that, we want to remind everyone that you can go to stockcard.io and see both of our portfolios that include all of the picks that we've made here on this YouTube channel. Also, we have the Beat the Bryans contest where you can pick 5 stocks you think will do the best between now and the end of 2022. And if you come in first place, you have a chance to earn up to $1,000. Enter now because Brian and I started at the beginning of the year and our stocks have gone down. You've got a really good chance of having bragging rights over us.
Well, there you have it. There's reasons to be bullish and there's reasons to be bearish on Twilio. I'm going to continue to hold my shares from here.
And while I gave it a thumbs up in my portfolio, I'm going to watch from the sidelines in real life.
Did you like this format? If so, please give this video a thumbs up and let us know in the comment section below. Brian's out.